June 2026 has brought dividend cuts and the delisting of one of my holdings. This sounds bad, but I've still made progress towards my financial freedom, and it also presents the opportunity to reflect on my portfolio and make some changes. So pop the kettle on and make a mug of your favourite brew while I take you through my June 2026 dividend update. Hello and welcome to InvestTea. I'm a UK-based investor who is trying to replace my payslip with a passive income through investing in dividend-paying stocks. Welcome to the June 2026 dividend update. In this video, I will be covering an overview of my current portfolio. I will review my dividends one by one. I will also share updates to my pie and talk about the delisting and dividend cuts. And of course, we'll see which of my bills have been covered this month and my progress towards becoming payslip free. A quick reminder first though, this is not financial advice. I'm making these videos more for myself to force me to track the progress of my journey, but also so you can follow along and see what is possible. I hold my portfolio in a Trading 212 stocks and shares ISA, and specifically use Trading 212's pie functionality. I started investing in this portfolio in March 2024, and it's currently worth nearly £6,050. Nearly £690 of that is capital growth of the 36 holdings within the pie. Each holding represents between 1% and 5% of the total pie. I have a buy and hold strategy, meaning I primarily buy shares and very rarely sell. Lastly, I use the auto invest feature to invest £150 every month and let Trading 212 self-balance across the holdings to maintain their respective weights. Now let's review June's dividend payments one by one. Starting on the 2nd, my first dividend of the month was for 74p from Rotork. Rotork is a UK-based, globally leading manufacturer of industrial flow control equipment. They specialise in designing actuators, gearboxes and control systems that manage the flow of liquids, gases and powders across industries like oil, gas, water, power and chemical processing. They pay twice a year and are currently 1% of my portfolio. With a yield of 2.6%, they've been paying dividends for more than 25 years, with a growth rate of around 5%. The 4th of June saw payments from 3 of my holdings. First up was Diageo, paying one of its 2 annual payments. This payment was £1.63 from the 10.8 shares I own. Diageo is a British multinational alcoholic beverage company and one of the largest producers of spirits and beers in the world. Headquartered in London, their famous portfolio of brands includes Guinness, Johnnie Walker, Smirnoff and Baileys. As I mentioned at the start of the video, Diageo have recently cut their dividend. The graph shown here makes this hard to see as they switched from paying in sterling to US dollars in 2023. This was because a growing majority of its sales, expenses and operational cash flows were generated in the US or in currencies pegged to the dollar. This is also an excellent example of why I started making these videos, as it forces me to analyse my returns in greater detail and make adjustments as needed. I will be considering my position in Diageo because of this cut, but as one of the larger 3% slices of my pie, I want some time to think before making any changes. So for the short term, they will remain in my portfolio. Next on the 4th was a payment from Legal & General. Legal & General, often referred to as L&G, is a major British multinational financial services and asset management company. They were established in 1836 and are headquartered in London. It is one of the largest insurance and investment groups in the world, offering pensions, life insurance and workplace savings. Currently, at 2% of my portfolio, this dividend was for a decent £5.97 from the 38 shares I own. L&G have been paying increasing dividends since 2009, following cuts made to protect them from the financial crisis fallout. Since then, growth has been around 4 to 5%. L&G do have a large yield of over 7.5% too. Lastly, on the 4th was a payment from BAE Systems. BAE Systems is a major British multinational aerospace, defence and information security company. Headquartered in London, it is Europe's largest defence contractor and one of the primary suppliers to the UK Ministry of Defence and the US Department of Defence. 3% of my portfolio is BAE, and this month saw a payment of £2.17. BAE have another long track record of paying increasing dividends since the year 2000. In recent years, the growth rate has been hitting almost 9%. Coca-Cola HBC was my next dividend on the 9th of June. Coca-Cola HBC, or Coca-Cola Hellenic Bottling Company, is not the Coca-Cola company themselves, but a bottling partner. They manufacture, package and distribute a massive portfolio of beverages across 28 countries, serving over 715 million consumers. Their headquarters is actually in Switzerland, but they list their shares on the London Stock Exchange. This is why it shows as tax exempted due to the way Swiss tax law works. I have 5% of my portfolio invested and received £6.94 from one of their 2 annual dividends. They have been paying dividends since 2012 with strong growth above 11%. The 10th of June saw a payment from Smurfit Westrock. Smurfit Westrock is a global leader in sustainable paper and packaging, formed by the 2024 merger of Ireland's Smurfit Kappa and America's Westrock. The Dublin-based company manufactures recyclable boxes, containers and packaging, operating in 40 countries with over 500 production facilities. However, they have now been delisted from the London Stock Exchange and are now focusing purely on the New York Stock Exchange only. As I want to keep my shares UK-based, I've now sold my shares and replaced them with another holding. I'll cover this later in the video. The holding was 1% of my portfolio, and this last dividend payment was for just 57p from the 2.2 shares I owned. Getting historic data has been difficult, likely due to the merger of Kappa and Westrock back in July 2024, but you can see some dividend growth. Nevertheless, growth is now moot as I've sold my shares. The middle of June saw a dividend from Diploma. Diploma is a London-based international group of over 17 decentralised businesses. They distribute specialised technical products and services operating across 3 core sectors: controls, seals and life sciences. They pay 2 dividends a year and are one of my largest holdings at 5% of my portfolio. This month they paid 93p from 4.8 shares. Diploma's dividends show strong growth of 13% over the last 15 years, although slowing to 8% in the last 5. The yield is also low at less than 1%, so I may consider reducing my position size if the growth continues to decline. On the 18th, I received a dividend from Relex. Relex plc is a multinational information and analytics company headquartered in London, serving customers in over 180 countries. They pay 2 dividends a year and are 2% of my portfolio. This month they paid £2.08 from the 4.3 shares I own. Dividend growth is good at over 7.5% in the last 5 years, and yield not too bad at 2.76%. I may consider increasing their position size in the future. The last dividend of June arrived on the 30th from Alliance Witten. Alliance Witten is one of the oldest and largest investment trusts in the UK, formed from the £5 billion merger of Alliance Trust and the Wittan Investment Trust. They pay quarterly dividends and are 3% of my portfolio. This month they paid 95p from the almost 13 shares I own. The yield at 2.14% is not too bad, but dividend growth is excellent at over 10% on average over the last 15 years and nearly 15% per year in the last 5. Before we review the totals of June's dividends, let's review the sale of my Smurfit Westrock holding. The main reason for this was due to the delisting from the London Stock Exchange I mentioned earlier in the video. My understanding was that if I didn't do anything, the shares I owned would be moved to the New York Stock Exchange. I didn't want this to happen, as I would have to start dealing with the US withholding tax and W8BEN forms, etc. So on the 18th, I sold the shares. I did unfortunately make a loss of £9.21 and only received a total of £4.96 from dividends in the 2 years of holding them, meaning a net loss of £4.25. Having said that, even if they hadn't been delisted, I was considering removing them from my portfolio. As you can see, their dividends are subject to a 25% withholding tax. This is due to the company being domiciled in Ireland and hence the Irish 25% withholding tax applied. I should be able to apply for a tax refund because of the double taxation treaty the UK has with Ireland, but understand the process is notoriously difficult, so I'm not sure it'll be worth the effort for the potential of £1.65 I would get back. Either way, the delisting has made my mind up to simply sell the position. The sale of Smurfit of course meant I had to look for a replacement holding for the slice of the pie left open. I considered increasing the size of another slice, but wanted to keep the same number of holdings. In the end, I went with Fidelity China Special Situations, ticker FCSS. FCSS is a UK-listed investment trust that aims to achieve long-term capital growth by investing primarily in companies listed in China and Hong Kong, as well as Chinese firms listed elsewhere. I feel this helps diversify my portfolio with greater exposure to China. In terms of dividend growth, they have been growing payments since 2011 and show very strong 19.4% average growth in that period. The yield is also reasonable at 3.5% currently. Unfortunately, they only pay annual dividends, so there will be a bit of a wait before I see any return. However, as this is only 1% of my portfolio, I'm mitigating some risk by the smaller position size. So that brings us up to date with the pie. Now let's go back to June's dividend payments. The total for June was £21.98. Comparing that to the previous month, this is only 2/3. However, May saw payments from 13 holdings, whereas June was only 9. This, of course, is due to the nature of dividends, with some companies paying out twice a year, where others are quarterly. Looking at the rolling average over the last 12 months, this comes to £13.65 per month, which is an increase of 47p from last month's rolling average. At the end of June, I had £5,359 invested, so this is a yield of over 3.05%, another increase on May's 2.98%. Now looking at how much of my monthly bills are covered. We can see that, as usual, my Netflix and Disney Plus subscriptions are both easily covered, leaving £5.98. The remaining £5.98 won't cover all my mobile expenses, but does make a contribution at least. Of course, I don't actually withdraw any money from my account to pay for these items. I leave it in my portfolio and use it to buy more shares to compound into bigger dividends in the future. Leaving the cash in the portfolio does mean it will attract some interest too. I've just made a video on my thoughts about the looming ISA tax on cash interest. I'll leave a link in the video description to watch that. Anyway, that brings us to the end of June's update. I would be very grateful if you could subscribe, and that also means you'll be notified when I release my next update. Why not also leave a comment about your investing journey? Until next time, keep investing and goodbye.